Another stock which is muted in terms of its trajectory today after the results is JSW Energy. In fact, the company's results are in line with the expectations, but the PAT, remember, even though revenue has gone up by 60%, EBITDA is very strong, but the net profit dipped 17% for JSW Energy. Let's get chatting with the management. Sharad Mahendra, who's the joint MD and CEO of JSW Energy, now joins us to give us more details. Sharad, always a pleasure speaking to you. Now, the key reason for the PAT's decline, even though your revenue, EBITDA, operational performance has been good, the key reason has been cited as capitalization of new projects. Now, can you give us a breakdown of this particular component contributing to this decrease in the PAT, and also what effect it has on a longer term basis?
See, yes, you rightly said, if we compare a year back, September 24 to September 25, we have added capacity of almost 5.5 gigawatt, which is a mix of organic and inorganic growth both. Two large acquisitions which we have done is, one is the KSK Mahanadi and also the O2 Power, and a lot of greenfield capacity additions which have happened. So what we have seen that if we compare September 24 to September 25, our asset base has increased significantly by almost 49,000 crores. And today, September 25 closing, the total asset value is almost 113,000 crores, which is an increase of 49,000 crores over last year, September. So this 49,000 crores, we know this business is a 3:1 debt equity business. So almost you can say 38,000 is a debt against this capacity addition of 5.5 gigawatt. And lot of capitalization also during the year has taken place, including the recent capitalization of 240 megawatt of hydro project in Himachal, which we have capitalized during the quarter. Lot of fresh capacities, greenfield capacities, which we have capitalized. So it is a mix which has resulted in the higher, because of the higher debt, the interest increase and also the depreciation. But here it is very important for this business, which is again an annuity business 3:1, that the cash profit has grown by 27%, which is very important to sustain the growth which we have planned and to fund our project. So it is more important is the cash profit, which continues to remain positive, 27% during the quarter, and in H1 of the year is almost 44% growth in cash profit.
All right, H1, 44% growth in the cash profit. But Sharad, Mahanadi and O2 Power acquisitions have significantly boosted the EBITDA. Could you also detail the operational synergies as well as the capacity utilization of these acquired assets compared to the initial projections that you have? And also, are there any further integration as well as optimization plans for these particular assets?
Yes, very important and a very pertinent question for us. Like KSK Mahanadi I'll start with, which we acquired in the month of March 25, and which has been now fully operational for more than 6 months with us. So there we have done we have been successful in bringing in a lot of efficiencies, which have resulted in a significant cost reduction, higher revenue and higher margins. One of the reason is that the plant availability, which was in the range of 75-76% last year in H1, this year we have been able to ensure a plant availability in excess of 97.5%. The plant load factor, which is a direct measure for the revenue, we have operated the plant despite on significant extended monsoons, lower demand at 77% PLF as compared to 65% PLF, which was witnessed by this plant last year in H1. So these are the efficiencies, significant reduction in operations and maintenance cost by reworking and renegotiating on the existing contracts which were there for operation and maintenance. All those factors have given us this performance for this asset, and which is sustainable going forward. Coming to O2 Power also. O2 Power, yes, it is a solar dominated portfolio. We expected it to perform slightly better than what it has done, but we have to understand that the solar radiation levels have been lower. Solar at a country level, solar performance, the PLFs have been lower than what were anticipated. These are because of the extended monsoons, which was almost close to 5 months monsoon, starting maybe in the end of May and continuing till beginning of October. So these are the factors, but these are gone now. Second half of the year in general is better for solar. So we expect that O2 also the performance will be in line with what we had planned, budgeted going forward.
All right. So solar, you've given clarity on that in second half, how it's going to be good for O2. But if we look at your net generation, which increased by 52%, and if we break it into the two segments of thermal and clean energy or renewable, then thermal is 62%, Sharad, and renewable at 42%. What's your roadmap when you try to balance the growth aspects between these two segments, clean energy and fossil fuel?
See, yes, as we have announced earlier, our strategy 3.0 of reaching 30 gigawatt by FY30, we are on track. And with our PPA signed order book, which is largely dominated by RE space, which is a mix of solar, wind, hybrid, and FDREs, and the energy storage. Apart from that, thermal, we have been successful to sign a PPA, which the bid which we won with the state of West Bengal for 1.6 gigawatt, which will be operational as per the PPA terms in 2030. And also KSK Mahanadi, which we have acquired 1800 megawatt operational capacity. And we have said earlier also that the entire balance of plant is ready for doubling the capacity to 3.6 gigawatt. And also the unit balance 3 units which have to come. One of the unit, more than 40% of the work is complete. Other 2 units, part of the work is complete. So this we will be completing in next 5 years, 3 to 4 years time at a significantly lower specific cost as compared to a greenfield thermal plant because of the factors which I just told. So it will be a mix of growth between in the RE space and thermal. Immediate, if you see year on year, we will be going definitely adding now capacities in RE. Because thermal is a long gestation, it takes 3 years to 4 years to 5 years or 6 to commission the plant. So we will be accordingly. So next 3 years we see majorly it will be in the RE space, and then it will be a mix of RE and thermal. But as we have said, guided earlier, 2/3, 1/3 of our RE and thermal portfolio will be maintaining in our growth journey.
All right. So moving towards 2/3 and 1/3. Now, Sharad, given the strategic focus on the 40 gigawatts of storage, how will the company really address the recent setback with the 500 megawatts of battery energy storage system BESS project, and if it's applicable?
Yeah, see, we have right now, even if we remove that 1 gigawatt hour of BESS, which is again is illegal, so I will like to avoid that. We have appealed for that in Supreme Court, but we will avoid further discussion on that. But yes, even if we remove that, in excess of 28 gigawatt hour of storage capacity which we have tied up, majority of that for which the PPA also has been signed, so which is a mix of pump storage as well as the battery energy storage. So as I said, for between thermal and RE, here also the battery energy storage capacities, we will start seeing commissioning in FY27, FY28, FY20 every year. And the PSP, the pump storage capacities, which are large capacities, that also we will see in 5 years time, the commissioning of these large capacities. One is in the state of Maharashtra, for which we have already signed the power purchase agreement.
All right, Sharad Mahendra, always a pleasure speaking to you. Thanks so much for giving us all the details about the quarterly performance and the outlook going forward. Thank you so much.